Alrighty, folks, we have a very popular video series with Mr. Dan Bird talking about where we've been, where we're going in the stock market. We're going to talk about maybe a head and shoulders pattern forming or not. What is going on with the Magnificent Seven? That will be video number 2. Let's welcome Dan to the show. How you doing, buddy?
I'm doing great. Good morning. How's everything?
Things are going well, man. I got to tell you, people really love our conversations. They love your data analysis, your view of the charts. Thank you for doing the midweek update last week. I know the audience really appreciated that. But let's summarize last week. What happened last week?
Yeah, it was the midweek was interesting. I mean, we talked about it last week. I said that the NVIDIA report will probably be the highlight of the week, even more than Jerome Powell.
Mm-hmm.
And kind of turned out that way. Although I think, well, we'll look at the charts, but I think Thursday everybody was preparing for a very hawkish report from Powell. So everybody sold.
Everybody got flat before Jerome Powell. They learned their lesson from last year.
Yeah, exactly. It was pretty interesting, though. It's just fascinating how the charts end up setting up as a result of that.
Okay.
And it never ceases to amaze me how the charts show the balance in the market. I mean, you can say that it's voodoo or whatever you want, but it's just incredible. I'll show it to you today, but it's just incredible how the whole thing works.
Well, I look forward to it. I learn something from you every week. So let's get into it. What do you got going on?
All right. Well, let's first take a look at last week. Let me share my screen. And you should see my website.
I do.
So let's take a look at last week. We'll use my my newsletter. And I'm putting this now at the top of my newsletter, the Investors Business Daily.
Okay.
They do a very quick, and they do this every day. They do a very quick, just a quick review or analysis of the market. So there's not really a lot of information here. It's just sort of here's where the market is right now.
Right.
So they say market in correction, major indexes meet resistance at the 50-day moving average. We'll look at that in a second. Lower exposure to 0 to 20%.
Oh, wow.
And
so they're saying sell? That's what they're saying?
Well, here's what they say. This is a show me market. Until the market rally attempt proves itself with real strength, investors should be in wait and see mode.
Okay.
A rebound up to the 50 could foreshadow. Now, notice how they do this. Could foreshadow buying or shorting.
It's going to go one way or the other.
Yeah, one or the other, depending on what happens next. So investors should have buy and short lists prepared.
Okay.
So
I like that.
Basically, that 50-day moving average is the key.
Okay.
We'll see. We'll see what happens. So here's last week. Let me make it a little bit bigger here. So last week, existing home sales came in a little lighter. Building permits came in roughly flat, I would say. Right. New home sales came in a little higher. So that was good. So, I mean, it wasn't really a blockbuster week as far as news was concerned.
Correct.
So the big thing was Powell on Friday. But let's look.
Do you want to talk about Powell's speech, or maybe save that after we look at the charts?
We can talk about it now.
Yeah. So what was your takeaway? What was your takeaway from the
my takeaway was pretty much what I said last week. I said, he's going to talk a good game. He'll continue to say we may still be raising rates. You thought that he would say no rate cuts next year, and I didn't think he would say that.
Right.
Yep. Which I don't think he did say that.
No, he certainly wasn't black and white. No, he's
right.
higher for longer.
Right.
Actually, when I actually listened to his speech, I think 4 times now, and I think we finally got the Powell that I've been hoping for. I've wanted him to come out sounding hawkish with tone, inflection, all of that stuff. But I actually went back and read his speech, like the words. It's actually a pretty dovish speech.
Yeah.
Right? If you actually you took out the inflection and all of that. So I think we finally got Jerome Powell doing what I've been hoping for, talking tough with lots of outs. I'm going to call it right now, Dan. No more Fred, no more rate increases.
Yeah, I would agree with that. I don't think there'll be any more unless something really dramatic happens. I think there will be rate cuts next year.
Oh, I'm going to stick with my no cuts in 24.
Yeah, I think there will be cuts in 24.
Okay.
I think, historically, he's pretty much, the Fed has pretty much kept it flat for 6 months. The longest they've ever gone is 12 months.
Right. Correct.
So if there are no more hikes, that means the last one in
July,
the last one in July, last hike in July was the last one.
Okay.
So even if you take that out a year, which is the longest they've ever gone, that's the middle of next year.
Yeah, but I think again you're forgetting something that you educated us on. I think it was a month ago, maybe 6 weeks ago, when you were telling us about the M2 money supply.
Right.
And basically everybody was saying, hey, M2 money supply hasn't gone negative since the Great Depression. And then of course you pulled out the chart, showed how positive, over a 2-year period, M2 money supply still is.
Well, still above trend. Yeah.
Right. Still above trend.
Yeah.
I think the fact that we printed $1 gazillion makes any look back to historical averages uneventful in this time. But again, who knows?
Yeah, that's true. But there's a delay in rate hikes.
No, there's no, and that's another thing that I think Powell was really highlighting Fridays. Like, boy, we're nervous about some of these lags coming. Right. So you could be right. You absolutely could be right. But
I mean, I think the lags. I think he has done his job.
Yes.
Inflation is coming down. It's not going to come down rapidly. It's going to bounce around, kind of sideways, slightly lower.
Yeah, the last mile is hard. The last mile is hard.
Yeah, the last part's really hard, but it's going to be heading in the right direction.
Okay.
But the lag in the hikes is going to at some point break something.
Oh, it has to. You're right.
And when that happens, then he will start cutting, and then the clock starts ticking towards a recession.
Okay. All right. I like it. Yeah, but, you're probably right.
That's historically that's what's happened. It's never been flat for more than 12 months. And 12 months puts it at July next year. It's usually about 6 months. So that puts us at January, February. I think that's too soon. So probably somewhere in Q2 next year.
Okay.
He might start talking about cuts.
Yeah, I think the market is currently betting May or June.
Yeah, and it depends on what the economy does, right? So if we look at next week's calendar, next week has a few interesting things in it. GDP.
Yeah.
Now, I didn't look at GDP now. What's that saying?
Well, GDP now is for Q3. It's 5.9.
Oh, it's still up there? Okay.
Yeah.
So the forecast right now for Q2 is 2.4.
Yeah, that's a look back. Yeah. That's the second. Right. That's the second. They do it 3 times. This is the second time looking at Q2.
Right. So that's still higher than the previous one. So GDP is, the economy is still healthy.
Yep.
PCE is the key one. That's the one that Powell really is looking at.
Yeah. PCE core specifically.
Right. So we'll see how that comes in. And that's on Thursday, 4.1. And then we have the non-farm payrolls on Friday.
Which do you think is more important, non-farm payroll or your PCE core?
I think to Powell, it will be PCE core. I think to the market, it will be non-farm payrolls.
Yeah. So the last couple of months, I might be wrong, but I think non-farm payrolls, which is the Friday number, not the ADP report, the Friday number, it's surprised to the high side, or did last month come in low? I forget.
Last month came in low.
Okay.
The 2 months before that came in higher than expected, but the adjustments came in lower.
Yeah, the adjustments. Yeah. Classic.
But last month came in lower, which was, again, not significantly lower, just a little bit lower.
Right.
But that, is what Powell wants too.
Agreed.
Wants to see that coming down. But here's the big one. Here's the important one, the one that I watch.
Yeah, the employment rate.
Unemployment rate. Wow. Still at 3.5%. So, I've laid out in the past the 3 things that I look for to determine if a recession's coming. And one of those is whether we get a dramatic increase in that rate. So
just so people realize, what is a dramatic rate increase?
Half a point or more. So if this jumps to 4% next month, so let's say it comes in at 3.5 on Friday.
All right.
And then next month it jumps to 4.
Okay. So it's not only a move, but it's also duration. You want it in a month or 2 months.
Right. And it has to be a half a point.
Okay. So we're not talking, 3.5 to 4% by February. You're talking quick, sudden. Okay. Got it.
Right. Yes. And when those quick ones happen, we're usually only 3 months away from a recession.
Got it. Okay.
So that's one of the things that I'll be watching on Friday.
Yeah. And I just validated GDP now is at 5.9.
5.9. Yeah. We'll see what happens.
There you go.
And it will adjust between now and then. So, All right. So that's how you get to my newsletter. If anybody's interested, this is the first weekend. So before anybody starts sending you notes saying, where's my newsletter? I haven't seen it.
Doesn't exist anymore. You got to go.
I don't send it. I do not send it through email any longer.
That's right.
This is the first weekend. Did not go through email.
I think that's great.
But you can just go to the website and just click on it right here. Just like that. And up it comes with all the favorite cartoons. I fell down a rabbit hole. I fell down a Jackson hole.
Yeah. That's a good one.
You're just talking about Powell.
Yeah, it's not a hawk. It's
no hawk.
Buzzer.
And then here's a funny one about NVIDIA.
Cha-ching. There you go.
NVIDIA. And then look up in the sky, a hawk, a dove, a hawk, a dove, a hawk, a dove. I got to get out of Jackson Hole.
That's good. I love it.
So anyway, that's how you get to my newsletter. One thing that I added on the front page is available to anybody. You don't even have to be a subscriber. Right. You can always get to this front page. I added the IBD.
Oh, that's nice.
Quick review. IBD has a 825 market and correction. And then these charts right here, again, you don't need to be a subscriber to get to these, but they are very informative. This is a daily chart of the major indexes. So this is the S&P. And the thing that I want you to focus on is this red line right here. That is the 50-day moving average.
Oh, okay.
So remember what IBD said?
Yeah.
Said market got rejected at the 50-day. Watch the 50-day to either go short or go long. So it either breaks through this, which means we're off to the races, heading back to new highs, or it gets rejected, which it did get rejected.
Yeah, it looks like.
And we break down. And again, S&P here has a head and shoulders, but if you look at the NASDAQ on the same chart, on the same page, I actually put in the right and left shoulder for the head and shoulders.
There you go.
Now, just as a reminder, last week when we talked, if I remove everything, see this one candle that's down here in the pink level down here.
Yep.
That's where it was when we talked last week.
Okay.
So if you forget about everything to the right of that, when we talked last week, I said this could be setting up in a head and shoulders pattern.
Right.
And I had this arrow going across here pointing right at that. I have not changed that arrow. That arrow is exactly where it was last week.
That's amazing.
Exactly. And it was pointing right there. And you see what happened on Wednesday. We got NVIDIA earnings came out after the close. On Thursday, the market gapped higher.
Yep.
It opened way up here at the 50-day moving average and then sold off all day.
Yeah.
So this is what I said. It's really interesting how technical analysis works sometimes. It hit the 50-day moving average to a tick. It opened right at it and got rejected. And then on Friday, when Powell's speech wasn't as hawkish as a lot of people thought it could be, the market went down in the morning and then started coming back.
Yeah.
But look at the volume down here.
Yeah, pretty weak volume.
In fact, look at the volume for this whole little rally over the last week. Very weak.
Now, is that just is that more about August? Just August being a
part of it is August, but even so,
okay.
You know, the one that had the biggest volume day was this big red candle right here.
Mm-hmm.
So while this Friday candle was encouraging, that's a bullish hammer. Mm-hmm. So if you think about what it means, this market sold off all the way to the bottom, and then the rest of the day into the close, it came all the way back and closed higher than it opened.
Okay.
So you would think that's bullish, and it usually is bullish, but very low volume. So there's no real conviction.
No conviction, yeah.
In that move.
Okay.
So we're still looking at this pink area. This is the support line. This is what's called the neckline of the head and shoulders. So a week ago, there was no right shoulder.
Right.
I only drew this line saying, if there becomes a right shoulder, it is likely to happen right here. Mm-hmm. Well, look what happened. That's exactly where it happened.
Yeah. And people can go back on your playlist and see last week's video. And
yeah, you can look at it last week and see that. So it still needs to break through this pink area for the head and shoulders to actually be valid.
Okay.
But if it does, the potential target is down here at 12,000.
Got it.
Okay. Now, the other thing I put in here, and this is a kind of an advanced technical analysis thing, is I put these horizontal bars in. These bars are volume at price. So rather than looking at the chart from a time perspective, you know, one day at a time from left to right, we're looking at it from a volume perspective and how much volume was there at each price level. And if you notice, the two biggest ones, I actually extended them across. The first one up here is right where the left shoulder and the right shoulder are. And the one down here, which is actually the biggest volume bar, is right down where the target is.
Interesting.
So what that tells you is that's where the orders are.
Right.
Right now, I would say these are sell orders up here based on what happened on Thursday.
Okay.
And if it gets down here to this level, I would say these are buy orders down here. But we'll see.
Yeah.
Okay. We don't know yet if that's going to happen. All right. So these charts are right on the main page. The other thing I think is interesting is the 10-year Treasury yield. Here's the Treasury yield last week, and I don't think it had hit the high up here last week, but last week it went up and actually took out the 52-week high.
Okay.
And then it backed off. And I mentioned this on the midweek update that the 10-year yield came down 130 basis points on Wednesday.
No, you mean?
Yeah, 130 basis points, 1.3%. It came down.
Okay, 1.3. Okay, got it. Okay.
Yeah. So it hit this resistance level, got rejected and came back down. And now the question is, what's it going to do? Is it going to go sideways, or is it going to go back up and test this 52-week high and break through it? Possibly. You can see the 2-year is already back to the 52-week high.
Yeah. Wow.
And what that is doing is it's uninverting the yield curve. So the 10-year minus the 2-year inversion. As the 2-year accelerates higher, it helps this inversion become uninverted.
Yep. Okay.
That's the second thing that I look for a coming recession. Recession typically happens 6 months after this gets back above zero.
Right.
So there's two things to watch for: the percentage on the jobs,
right,
and the inverted yield curve.
Very cool. All right.
Not that it's inverted. I mean, you look back how long this has been inverted.
Yeah, it's been a while.
It's all the way back a year ago. It's been inverted. If you were saying back when it inverted in July of last year,
that's 2 years ago. That's 2 years ago.
That's 1 year. There's 23. This is 22.
Oh, okay, 22. Okay.
Here's July. It's a 2 year. It's a year and 2 months roughly.
Got it. Okay.
There's July. So there were articles when it inverted back then. people saying, oh, the yield curve is inverted. That's always
recession coming. Yeah.
A recession is coming. They were talking about a recession in Q3. There's definitely going to be a recession because it's inverted. Well, if you go back and look, the recession doesn't happen until the yield curve uninverts.
Got it. Okay.
Which I actually have for these charts in here. Here's the inverted yield curve and recessions. These gray areas are the recessions.
Right.
And what I did was when it goes back above zero, which is this pink line across here, so you can see it's inverted all the way through here, goes back above zero, and in this case, it's 6 months till the recession. In this case, it was 4 months back in 2001. The COVID crash, it was 5 months. It wasn't inverted very long. It was only inverted for like a month back here. But after it uninverted, it took 5 months for the recession. And nobody knew about COVID when that uninversion happened, by the way. So pretty interesting. So you can see we're still pretty far away from zero.
Yeah.
Right here.
Yeah. Hey, do me a favor. Can you look at NVIDIA? I bet that's an interesting chart.
Yeah, it's one of our Magnificent Seven. So one of the things that I put on here a couple of weeks ago is the top 10 lists. And I update these every weekend. So top 10 for VectorVest, top 10 for earnings beats, top 10 for IBD, Investors Business Daily. And then I'll show you which ones dropped out of the top 10. That doesn't mean these are bad stocks. I think Helix now is number 11, right? It's just no longer in the top 10.
Got it.
But each one of these you can click on and look at the chart. So you can see what they look like. But over here is the Magnificent Seven. And we can look at NVIDIA, which is right there.
Yeah, we'll do the others in the next video.
We'll do the others in the next session. Yeah. So, yeah, NVIDIA was interesting. It hit this big green candle right here where you can see where resistance is, right?
Yep.
This is the earnings, the day after earnings. It busted through. In fact, it opened way up here.
Yeah, it opened, sold off all day.
Sold off all day. It sold off below resistance. And then that was Thursday. And then Friday, it continued to sell off.
Yeah.
It came back to the mean, the 21-day moving average. So if we look at this like this, the mean right here is right where this 21-day is.
Yeah.
These are the Keltner channels. So the first one is 1.5 times the average daily. Whenever it gets up here into this light gray, and if it gets above that, that means it's 4 times the daily. Right. But when it gets up into this light gray area, that's very extreme. It doesn't stay there very long, except for after the last earnings. It got way, way up here. It was probably at 5x up here. But it will eventually come back to the mean, back to the 21-day, which it did right here. By the way, that's a good place to buy it if you want to own the stock. If you see it gap up like this, and it's way above its moving averages, wait to see it come back to the 21, and then that's a good time to buy it. So what it did on the day after earnings, it went way up to an extreme right here, and then started coming back, and then it came right back down to the mean on Friday. So now we'll have to see what happens.
So as I remember our conversation last week or week before, I think you talked about you did one tranche of 20 shares.
I had 50 shares, 50 shares down here just before the last last earnings. I was actually waiting for it to get to 400, and it got to 403 right here. Now I should have just bought it,
but didn't.
Right, but I didn't. But it's coming back, so we'll see what happens.
Right. So maybe you still have the 50, you didn't get cashed out.
No, I've still got the 50.
Okay.
I don't have a stop on that 50 yet because I bought it way down here at 305.
Okay.
Right down here is the day before earnings.
Yeah.
So I don't have a stop on that because it's so far away. But I do have a buy at 400 right now.
Oh, okay. All right.
So I'll buy another 50 if it gets back to 400. And depending on how fast it starts coming down, I might lower that down into where this resistance line is right there. It's a little below 400, and the next one is at 380. So we'll see what happens. Now, keep in mind in all of this and the training that I did, and I've had some folks send me notes saying, I love the training and I learned a lot and I'm using your techniques, but when is a good time to buy? And my response was, well, the first thing to do, you want to do a top-down approach. You know, what is the market doing? What's the sector? What's the industry? And then find a good stock in that industry. Mm-hmm. Well, if we look at the market, the overall market, we have this potential head and shoulders right here. If that breaks through, I mean, it's going to very rapidly get way down here before we start to take off for the end of the year. So it's not just a question of when should I buy based on the charts or based on the scans that I created. It's what is everything else doing before I make a decision to buy, right? What's the overall market doing? And one thing that I put in my newsletters that could help with that is the VectorVest views. So right down here, VectorVest, what they say on the strategy section says prudent investors should only consider buying stocks long if the market moves convincingly higher on Monday.
Seems
or another way to
me.
say that, another way to say that is back to what IBD said, only if it goes back through the 50-day moving average.
Right.
Aggressive investors should play the market as it develops, which means either way, up or down. But
there we go.
You know, VectorVest can help you understand what the overall market is doing. It's only got one green light up here right now and two yellow lights. So it's still got a confirmed down signal. So it's not really saying jump in wholeheartedly yet. So I would wait and see what that says. And I put this every week in the newsletter. So you can just look at this real quick and see what it looks like and make a decision if you want to just sit out, which is what I'm doing, just sitting out and waiting to see what happens.
There you go. Well, do me a favor, show your website one more time so we can get on to video number 2.
Sure.
About the Magnificent Seven.
Breakpointtrading.net. It's not .com, it's .net. Just go out there and register your email. It does not ask for a credit card or any money or anything like that. You just register your email and then you will have access to the website and the newsletter. And then if you want access to a lot of the other things that I've shown, like all of those different charts and stuff, there is a subscription required for that. But what I tell people is, if you're in the market and you're actually investing in stocks or you want to buy stocks, then there's a ton of really valuable information out there. And it's definitely worth it. If all you want to do is follow along, you're not, committed to actually buying anything, but you want to watch the market and see what it does, then just get the free newsletter. Exactly. That'll be very educational.
Couldn't agree more. Thank you for coming here every week. I look forward to this, as I know the audience does. Take care.
Thank you.